Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, we had another volatile session. We've had a lot of those since the election day, haven't we? Now, in terms of the SPY and the QQQs, they ended the day largely flat. However, that was not always the case. At one point this morning, the markets were down significantly. The SPY was down approximately 1%, and the QQQs were down almost 1.25% before retracing and putting in a nice end of the day rally. The day's price action was largely due to two main components. Number one, continued tensions between Ukraine and Russia as we kind of brace for the Russian retaliation after yesterday Ukraine used US ballistic missiles to strike Russian territory. And the event number two that we're looking out for was the NVIDIA earnings, of course. A lot of pre-NVIDIA earnings jitters, leading to a few people to believe whether or not NVIDIA's actually coming into a topping out cycle. Have their numbers finally peaked? Have the revenue growth rates finally peaked as well? Well, we're going to take a look at that in today's video. In today's video, more specifically, we'll do a few things together. Number one, we're definitely going to go over those juicy earnings, guys. I have two earnings reports prepared for you guys today, and those are going to be NVIDIA and Target, that was down over 20%, their worst day in over 2 years. So we'll take a look at what exactly happened between these two companies. Thereafter, guys, we're going to take a look at our major technical analysis in terms of our stock market indexes first, then dive into our big tech names to see how they were holding up after today's very volatile session as well. And that'll be pretty much it. No portfolio review today. The next one will be on the Friday session as we recap all of the trades made over the course of the week. But obviously, I was trading today, and we did put on a few NVIDIA trades, most of which went very, very well. So without further ado, guys, let's jump right into today's action. SPY up about 0.03%, and the QQQ's down about 0.06. But look at the movements in the after hours after those NVIDIA earnings. NVIDIA right now is down about 2.5% after their earnings. Look at the SPY futures down about 0.3, and the NASDAQ down about 0.4. So curious to see how the markets open tomorrow and how they absorb those NVIDIA earnings. Taking a look at the heat map here, you will see for the most part, guys, it was not the best day. Most of your big tech names were down. Financials were down as well. Healthcare finally coming alive a bit and supporting the SPY. And the bottom half of the market, including consumer defensives, were fairly mixed, guys. So another session of very, very mixed price action. We haven't had a bright green day across the entire board much since the election cycle news of about 2 weeks ago at this point in time. Take a look at the one-day relative performance, guys, and you will see as well, it was not the best, right? We did have some outperformance here, healthcare and energy, but that's where it stopped. The rest of the market, very, very mixed to the downside, cyclicals and real estate and financials. Where does it leave us on the 1 week? Once again, guys, very, very, very mixed market. Utilities, energy, basic materials were up, but to the downside, a lot of very big sectors, namely healthcare, consumer cyclicals, and technology to the downside. So it continues to be this push and pull narrative between the markets right now. Have the markets topped out? Are we getting too much into euphoria, too much into FOMO into the end of the year? And could we be expecting a larger form sell-off? Or is this just very healthy rotation in the markets? Well, we'll take a look at that in just a few short moments. Before that, though, let us dive into some juicy earnings, shall we? And number one is going to be, of course, the big boy of the day. And we're going to take a look at NVIDIA, right? So NVIDIA coming in with their earnings after the close. And we were expecting before this earnings that I did believe that the expected move was going to be respected, meaning we were expecting an expected move here on NVIDIA. Well, the website's not cooperating now, but it was about 8% up or down. And I was saying in all of the videos coming into this earnings session, guys, that I did believe that NVIDIA wouldn't have the best shot of beating the expected move to the upside or to the downside. I was expecting the numbers to be very good, which they were. However, I was not expecting the similar outperformance that we were used to seeing after earnings over the past year and a half, where NVIDIA was going up 10, 15, 20% after their earnings cycles. That price action, I do believe, is largely behind us. And today was kind of a testament to that as well. Now let's take a look at their numbers, guys, because in terms of the numbers, I have nothing bad to say. They absolutely crushed this quarter. And in terms of the guidance as well, absolutely crushed it and reinforced that the demand for their products still stays at record highs. Take a look at their numbers right now. They beat on EPS by a very nice 8% and beat on revenue by a very nice 6% as well, with an increase in guidance. So it was a triple beat by NVIDIA. So why is the company down over 2.5% right now? Well, as I was describing after last quarter's earnings, when we did the exact same thing, I think this is just a case in point of the company's prior success being its own worst enemy right now. NVIDIA is facing very, very tough year-over-year comparison numbers, so let's dive into the news article and make some sense of exactly what happened today. NVIDIA nearly doubles revenue on strong AI demand. The numbers, guys, were absolutely fantastic. You would be very hard-pressed to find anything wrong with these earnings from the company. The results show that NVIDIA is continuing to grow quickly while demand for its powerful AI chips remains high. NVIDIA said it expects about $37.5 billion plus or minus 2% in the current quarter sales versus the 37.08 expected. So they beat on guidance for this current quarter as well. A slowdown, however, from a 265% annual growth in the same period a year prior. This quarter, guys, is 70% year-over-year growth in revenue. A fantastic number when you take it out of context. But when you put in the context that the company was putting in crazy numbers before, it just goes to show, right? NVIDIA is facing the law of large numbers. You can only grow at exponential triple-digit percentage rates for so long before that growth rate kind of catches up to you and levels out. Let's continue. Revenue continues to surge at revenue, rising 94% on an annual basis. However, that is still a consecutive slowdown from the previous 3 quarters when sales rose 122, 262, and 265 respectively. So as I was saying, guys, they are their own worst enemy at this point in time. The year-over-year comparables are really hurting NVIDIA's ability to continuously raise the bar more and more. But the numbers were super strong. NVIDIA posted $30.8 billion in its data center division, rising 112% a year ago, while the analysts were only expecting a revenue bump of $28.82 billion. So once again, beating on the data center revenue, another beat for NVIDIA. They beat on absolutely everything, guys, but the stock is still down. We've seen that a few times this current quarter with big tech names putting in fantastic numbers, but Wall Street just not giving them those 10%, 15% bumps in after-hours trading that everybody feels that they deserve. Now, net income for the quarter rose to $19.3 billion, guys. That is still net margins of 55%. Absolutely phenomenal for the company. Take a look at the net margin history, and you'll see what I mean, right? Ever increasing net margins, and now we've kind of been flatlining around the 55% mark for the last 4 quarters in a row. So the company's doing a great job at protecting its lead in the industry and still shows that it has phenomenal pricing power by being able to keep up those net margins. The gross margins rose to 73.5, slightly higher than the analyst estimates as well. Many of NVIDIA's end customers, such as Microsoft, Oracle, and OpenAI, have started receiving the company's next generation AI chip called Blackwell. And a big focus was going to be on how fast can they get these Blackwell chips out the door, and do people like them already? 13,000 samples of the chip have been shipped to customers. NVIDIA CEO Jensen Huang said in a statement that Blackwell is in full production. Every customer is racing to be first to market. Blackwell is now in the hands of all of our major partners, and they are working to bring up their data centers. Now, the Blackwell chips are fairly revolutionary, guys. The efficiency booms that these companies are getting from switching from the Hopper series of chips right now to the Blackwell series are staggering. Not only are the chips more powerful and faster, but they're also tremendously more efficient, especially in power usage. And we know that power usage is a very big component of data centers right now, and hyperscalers are turning to solutions such as possible nuclear power to power these data centers. So it's nice to see NVIDIA focusing where customers want it to focus on the power efficiency. Efficiency gains are all the way between 33 and 50%, which is phenomenal gains in efficiency in terms of power. Both Hopper and Blackwell systems have certain supply constraints, and the demand for Blackwell is expected to exceed supply for several quarters in fiscal 2026. Now, big tech earnings kind of tipped they kind of gave us a tip in terms of what we were to expect for this demand for NVIDIA, right? We heard from Microsoft, Amazon, Google, and other companies alike that they were going to be stepping up the demand for, or rather stepping up construction of data centers into the end of this year and into next year as well. So demand was not supposed to be a problem for NVIDIA, and now we get it from themselves directly. NVIDIA's gaming business reported $3.28 billion in revenue versus the expectations of $3.03. Now, the gaming segment, talking about the average retail gaming cards for average users such as you and I, that has been a little bit of a pain point for NVIDIA and AMD, mind you, for at least the last year and a half. 2021 and 2022, the era of free money, low interest rates, and stimulus checks brought a lot of demand forward for PC and electronics, and that market has been in a little bit of a slump for the last year and a half, and we are watching for the cyclical bottom of that industry for a little bit of upside, and apparently NVIDIA has a hint on this. Take a look. NVIDIA said the rise in sales was because of increased demands for GPUs for PCs and laptops, as well as an increase in game console chip revenue. So, starting to find a cyclical bottom in consumer and electronics. We've heard that from a few other manufacturers of semiconductors, such as ON Semiconductor, who has a lot of end market chips for those types of segments. Automotive car sales came in at 449 million, up 72% on an annual basis, which NVIDIA said was due to self-driving car chips. The segment also includes chips that NVIDIA sells for robots. So here is the full markup of NVIDIA's revenue, the most recent quarter. You can see the data center division is once again leading the charge. Very, very nice gains. But look at gaming, right? Gaming finally putting in a very wide margin beat versus the last few quarters. So we know that NVIDIA's been struggling, as I said, the last year and a half, right? Look at all the numbers I'm highlighting. They're almost the same for almost a year. Finally now starting to find a cyclical bottom in the PC and personal electronics component of the market, rounding the corner, right? Maybe demand will be picking up there in 2025, which is also the guidance that we've received from other companies such as Microsoft, who have a lot of end user components, obviously, or end user products rather, for consumer electronics. Now, professional visualization, that's also up. Auto industry is also up, and OEM and other is also up. So NVIDIA firing on all cylinders, guys. Every segment of their business did extremely well. Now let's dive into the valuation, shall we? So is the company cheap? Is the company expensive up here at the price that it currently stands in the after hours of about $142? Well, we kind of know that NVIDIA has always been a little bit rich, especially after the last year and a half, but it's not as expensive as certain people may lead you to believe. So obviously, guys, company's doing extremely well, revenue growth of 23.5% per year, EPS growth of 25% per year, and crazy net margins, and also crazy amounts of free cash flow. So looking very good on the free cash flow front. The balance sheet is extremely healthy. And when we take a look at their growth rates, guys, you will see indeed that the company is expanding EPS very nicely through 25 and 26, but we see the taper off start to happen between 26 and 27. So we're still in the midst of the infrastructure boom right now, and the CEO, Jensen Huang, is still very bullish, at least for the next year, at least into 2025 and a portion of 2026. But you can see there's a clear leveling off here of the revenue and EPS numbers between the 26 and 27 fiscal years, which is what analysts expect when they expect the growth rate for NVIDIA to kind of taper off. So are NVIDIA's best days behind us? Well, if you're looking for 1,000% rallies, 100% rallies, most likely. But can NVIDIA continuously push the levels incrementally higher over the next year? I do think so, guys, because they are still the leader in the industry and nobody's catching them anytime soon. They still have an 85% commanding market share of the data center business. So revenue and EPS growth rates very nicely. Now, the valuation, PE at 142 is a 48.5. At first glance, it appears to be a very high number, but when you divide that by their beautiful EPS growth rate, you get a peg of 1.94. Now, we know anything under 1 is cheap, anything over 2 is starting to get a little bit of expensive, but at NVIDIA at a 1.94, I wouldn't say that it's too bad. We know that Wall Street has been giving this one a higher valuation just because of their commanding dominance on the sector as a whole, but we have to be a little bit cautious, right? Which is why I always say I'm interested in buying NVIDIA, but I want to buy it when it's on certain discounts. That being said, I do still maintain in the event that we have some long-term NVIDIA shares, I don't necessarily see a reason to sell just yet. The company should be continuing to dominate all throughout 2025, and the demand is going to be excessively strong. NVIDIA's next revenue segments can possibly come from the software business, which we didn't get a glimpse into on the earnings call today, but Jensen Huang has been giving hints about this over the last 6 months, that really the next revenue vertical for the company is going to be attacking the software business as a whole and leveraging its software dominance possibly into the AI space. Now, which segments they're going to be attacking are still somewhat unclear, but I do think that's going to be a very clear revenue vertical they will be attacking over the next 1 year worth of time. So that is what I'll be paying special attention to, because we know the infrastructure portion of their business, the hardware buildup, is kind of going to taper off at the end of 2025 into early 2026. So we're going to be curious to see what's the next revenue vertical that NVIDIA can deliver to us. And I think it really will be software. So I don't really see any reason to sell the shares right now, but in terms of where I want to buy the shares, I'm just going to go off of straight technicals, guys. If we come back down 130 to 120, could be a great breakout, retest, and run area. So I'll be looking to aggressively go shopping for NVIDIA, because I do still think there is some upside left in this company over the course of 2025 and even early 2026. But if you ask me, is the stock going to double and triple over that time? Probably not, but I would not be surprised, guys, if you see this stock in maybe the $175, $180, even $200 range within the next 12 months in the markets, provided, of course, that we don't fall into some form of deep recession. So that's everything for NVIDIA, guys. Very happy with their numbers, but as a summary, once again, the company's past performance is its own worst enemy at current times, just facing very difficult year-over-year comparable numbers. So that's everything for NVIDIA. Hopefully you guys appreciated that. And now let's dive into the dumpster fire that is Target. So Target coming down over 21%, 22% almost on the day. We know that we heard from Walmart yesterday, and Walmart actually told us that the consumer is very, very healthy. They're seeing same-store sales increase. They're seeing consumer discretionary spending increase as well, and everything looked good on that front. So we were coming into these Target earnings expecting the company to do well, or at worst, maybe do a little bit less good than Walmart, but still not fall off a 22% cliff, right? So what exactly happened? And is it a testament to a weakened consumer? Is Amazon, Costco, and Walmart, are they possibly lying to us? Or is this maybe something specific to Target's business? As soon as I covered this one earlier this morning with the Discord members, and I saw the numbers and I saw the market reaction, the first thing that I thought is this is due to the company's own performance and possibly losing some market share. And analysts do tend to agree. Take a look here at the earnings. Was not good. Miss on EPS by 20%, and that'll do it for a 20% decline, guys, and a miss on revenue by 0.77 as well. We know that Target just has been marred by these kind of mixed earnings cycles for the past 2 years. Some of the complaints have been a revenue mix problem, right? Where the company is not offering enough of everyday essentials and too much of their mix is in discretionary items. Other people argue that it's because of the company's political stance that it started taking back here in 2022, which kind of eroded consumer confidence in the company, and they kind of alienated a good portion of their client base, essentially. And some of those consumers have pivoted to other retailers such as Amazon, Walmart, and Costco, and just have not come back. So this is a story, guys, of a big box retailer that continues to lose market share right now towards Amazon, Walmart, and Costco. Let's dive into some of the articles right here. So Walmart hits new highs and Target dives after earnings as rivals diverge even more. Let's jump into it, shall we? So Target's stock tumbled to a 52-week low on Wednesday, a day after Walmart shares soared to an all-time high, as the rival retailers' earnings reports again underscored how their performance has diverged. Target posted its biggest earnings miss in 2 years and cut its forecast. The company spoke about a deceleration in discretionary demand. Curious, that's the opposite of Walmart, and blamed higher costs caused by the rush to move inventory ahead of the short-lived port strike in October. That's very funny. No other company so far has blamed the lack of revenue on the port strike except for Target. Let's move on. Now, the CEO has said that the consumers who are shopping carefully as they work to overcome the cumulative impact of multiple years of price inflation, and they're holding out for the best possible deal. That is true. Companies like Walmart and Costco and Amazon have told us that as most recently as the last few weeks. Now, let's move on. Customer traffic gains were similar at the two stores. talking about Walmart and Target. Yet Walmart's sales trends looked much better than Target's. Walmart traffic growth edged out its rivals, with a gain of 3.1% for foot traffic at Walmart versus a 2.4% increase at Target. Walmart's same-store sales rose 5.3%, while Target's increased only 0.3% year over year. Walmart's e-commerce sales in the US rose 22%, a bigger increase than the nearly 11% at Target. The sharp divergence of the winners and losers in the industry could become even starker as retailers enter their most crucial sales of the season, of the holiday season, of course. Target's disappointing results reflect the company's performance rather than the health of consumers. There you have it, guys. This is a company-specific internal problem, not necessarily having to do with the consumer. We heard from many consumer-facing companies, guys, whether it's Costco, whether it's Amazon, whether it's Walmart, the consumer is still spending, still healthy. Are they picky about their spending habits? Yes, but they are still spending in those stores. We also heard from the credit card companies and from the banks. Consumers are still spending in a relatively healthy fashion, a lot less than 2021 and 2022, of course, but they are still spending, but they're being very picky as to where they choose to spend their money on. Here you go. It's as simple as this. They're losing share. They are losing share to Walmart, Amazon, and Costco. He said that Target's inconsistent results over the past year are a warning sign about the company's execution. That kind of back and forth makes you wonder if there's something going on internally. One of the roots of Target's troubles is in the company's merchandise mix. 60% of Target's sales come from discretionary items such as home goods and clothing. That's the opposite of Walmart, which draws about 60% of its sales from everyday necessities such as groceries and household items such as paper towels. So the revenue mix problem, guys, not a very good problem to have. Who else has that problem, guys? The dollar stores right now. Both Walmart and Target mentioned the negative impact of the port strike, but Target appeared to put a major share of the blame for its weak quarter on the stoppage. Target has other questions that will factor into its future, including who will lead the company. Cornell, who has been the CEO since 2014, agreed in 2022 to stay on as the company's leader for 3 more years. On the same earnings call, several analysts posed questions about Target's plans for the future. If Target needs to make changes or invest more in its business, because we know they're losing market share, so it's an execution problem for the company, so something needs to be done. Cornell, the CEO, said the company will stick with what it already does, offering unique items and national brands, opening new stores, expanding its advertising business, and offering more ways for shoppers to buy online. We'll continue on our current strategy, stay in step with the consumer, and make sure Target's doing the same things that consumers across America expect from us. So the CEO remains bullish, guys, refusing to acknowledge that there's any internal problems at Target. But I do disagree, guys. When you have 3 companies that are, leaps and bounds ahead of Target right now, Amazon, Walmart, and Costco, it begs the question as to why you would invest in Target in the first place if you have clear market winners right now. Keep in mind that Target has failed international expansion in a few key locations, namely in my home country of Canada just a few short years ago. They tried to expand into Canada and closed all of their stores only 2.5 years into that expansion endeavor. This is a stark contrast in relation to companies like Walmart and Costco. You guys have seen the frenzy around the new Costco locations that have been open internationally this year, whether it's in Japan, whether it's in China. Amazon, we know, is expanding internationally very, very well, and Walmart as well has never had a problem with their international expansion. We looked at their numbers internationally yesterday. China was amazing. Europe was fairly good, and even Mexico and Latin America was quite good as well. So Target seems to be the only company that not only is struggling domestically in the US, but also has not been able to succeed in expanding into different international markets. So as a whole, guys, my review on the company is I don't invest in the company for that reason. I'm an Amazon shareholder, I'm a Costco shareholder, but I do not own Walmart. Not because the company's not good, it's just because I prefer Costco's business model better, and I also prefer Amazon's diversification with AWS a little bit better. But there's no problem in investing in Walmart. I've said it many times before, right? But Target, just not the leader of the pack. And when you have companies so strong, such as Amazon, Walmart, and Costco in their respective market segments, even though they overlap, right? All of them have different unique buying opportunities or buying theses for the company, right? This one, not so much. It's very tough for me to derive other than it maybe being crushed right now. It's very tough for me to derive a long-term investment thesis for this company over the other companies that I just mentioned, right? So here are the numbers. Revenue growth of 2.8% per year, EPS growth of 9% per year. And we can take a look here, guys. I mean, the expansion of EPS is happening right now, but still a far cry from what it was in 2021. And the revenue expansion, here's the problem, guys. Look at the flat revenue since 2021, right? 4 years of flat revenue. That's just not going to cut it when companies like Walmart have been expanding revenue since 2021. Everybody had the pull forward demand, but Walmart still finds a way to keep increasing revenue. Take a look at Costco as well. Costco, 2021 to 2024. Do you see a problem there? Ever expanding revenue. And Amazon, well, I mean, they have a few different things working for them, right? But still expanding revenue since 2021. So Target is the only company that is having a problem expanding the revenue, a problem attracting new customers, right? So that is why, guys, it's a bit of a tricky situation to invest in the company. That being said, the forward PE for 2024 at 121 right now is a very cheap 13.2. When you divide that by their EPS growth rate, you get a PEG ratio of 1.46. It's not even that cheap to begin with. However, when we look at the value metrics, such as the free cash flow yield, you'll see that the free cash flow yield is 7.4%. The company does bring in very, very decent free cash flow, but when you're not growing top line revenue aggressively and you have a lot of debt here, guys, not the best revenue mix and not the best debt to free cash flow mix or debt to cash on the balance sheet. Look, where's the cash on the balance sheet? It's just not there, right? Just struggling right now, guys, with all this debt. And I mean, this sector as a whole, that's always been it's always been something that the whole sector has, right? You take a look at Walmart, they have a lot more debt than they have cash and free cash flow, but they still find a way to make it work. You take a look at Costco as well, very capital intensive business, right? A lot of debt, but they do have decent cash on the balance sheet as a whole. So Target has the worst balance sheet out of its comparables and arguably the worst revenue growth run rate. So that is why, guys, even with a 7.5% free cash flow yield, this is where you start to ask the question, is this maybe just a value trap? Because we know they pay good free cash flow yield. We know they pay a decent dividend. They do buy back some shares, but guys, maybe just a value trap because we know they're not expanding as the rest of their sector peers. So for me, guys, this one is not a good investment for my long-term portfolio. And even for swing trading, guys, I have kind of stayed away from swing trading this company for the last 2 years. I do play it sometimes. And even yesterday, you guys have seen, nothing to hide here. You guys saw that I did take a short put option leading into today, part of the lottery trade segment, right? You guys know that I like to play some short puts before earnings. And here you go. I wrote the 131s, guys, yesterday for 28 cents, expecting the company to, at worst, maybe drop 5, 6, 7, 8% perhaps after the good Walmart earnings. I had a very nice wide margin of safety, right? A margin of safety of roughly 15, 16%, which was 2 times the expected move. And then Wall Street hits you with the 3 standard deviation move, 3 times the expected move, something that no one saw coming, blasting through all of the relevant areas of support of the last multiple years, right? So once again, coming down below, no touch for me, could even come lower and start filling the gap down here at about the 114, 113, and I would not be surprised. And that resulted in a very decent loss for me. It was a lottery play. I'm not expecting to win every single one of these earnings trades, but still just goes to show, guys, that earnings can be very volatile. Wrote these for 28 cents, and we had to close them for $6.70. Took like a $600 and something loss on that earnings trade. Now, so far this cycle, we've made a lot more money than we've lost on these earnings trades, but still, it just goes to show it can surprise you. And when you have an execution problem, this is what happens. Where have we seen this before? These big declines, execution problems, Nike, Starbucks, etc., right? We've seen it a lot over the past quarter. And Target is just another one of these companies where the execution risk of the company is front and center, not necessarily having to do with the health of the consumer. Same thing with Nike, right? Nike, it's not a consumer problem because other brands such as ONON, right, with their Hoka brands and other shoe brands have been performing very, very well. But Nike stock keeps going down. Execution problem. Starbucks as well. We know that other brands across the world have been performing very well in terms of whether it's a quick service restaurant or a coffee chain, such as Dutch Bros has been doing good, Luckin Coffee in China has been doing good, but Starbucks just posts disastrous numbers. execution problem, guys. So it's not the consumer's fault. It is a company execution problem directly. And for that reason, unfortunately, I am out. Will not be playing Target in the near term future as well. So that's everything for those two company earnings. Hopefully you guys appreciated that. Now let's dive into the juicy stuff, which is your technical analysis portion of the video. And the SPY, well, not much has changed once again, guys. As I said, take a special look on where we end up on the futures. We know that we've been struggling since the election, right? Big euphoric rally to the upside, daily consolidation. Can the bulls get together the daily uptrend rally for the end of the year? Take a look right here in the election year. You can see, I'll move myself over, midway through November is challenging, very volatile in or around the election before putting together a nice end of November rally and a December Santa Claus rally as well. Is that going to be the case? Well, seasonality does indicate that it is the case, and we do control the higher time frames here. Control the monthly time frame, control the weekly time frame as well. So I'm not ruling the bulls out just yet, but it's been very, very volatile recently and has led many people to be divided, right? A lot of people calling for the top of the market right here, right? Because of all the euphoria, the pivoting to risk on assets, such as the Russell, such as Bitcoin, stocks flying up after the election, 20, 30, 40, 50% in the last 2 weeks, right? A lot of euphoria in the market could be synonymous with an approaching market cycle top, but we know sometimes that these cycle tops can take a while. Before the election, none of this was happening, right? It was just a grind higher. Nothing was really rallying 20, 30, 40, 50% in a week. It was a very bifurcated market, to say the least, and I still think it remains that way. So before we get some gains, before we get a market top, I think that we're going to get kind of like a 2021 end of cycle rally where we get an everything rally, guys. Absolutely everything rallying, meaning no more mixed market. Everything pushing to the upside. And if you get, a good 2-3 months of that, that will be a sign to kind of hit the brakes. That'll be peak euphoria. But for now, I still see somewhat of a divided market narrative. And when you have a divided market narrative, usually the market can continue to upset the short sellers by continuing to push the gains a little bit higher. And I don't believe that we're going to get any big recessionary data, maybe much before the months of February and March. So we're looking at a very brief runway here, maybe, of a next bull expansion. Possibly from now all the way through February is a somewhat clear runway. But after that, when we get more economic data, when we get the Fed's clear path to rate cuts, when we get more indication on what the Trump presidency is going to do, when we approach the Q1 earnings in February and March, that is where we might get into a little bit of rocky territory. But for now, the markets still appear to be looking not too bad. So daily uptrend, pay special attention to the lows of yesterday. If we roll these over, daily downtrend is underway, and you will be looking at further weekly consolidation. Still a lot of space. Anything above 569, still just looking for a weekly higher low for possible grind higher by the bulls. So I wouldn't rule out the bulls just yet. We will take this one day at a time. The QQQs, same concept. Down today, roughly flat. Similar thing, right? Daily uptrend is in motion. Pay special attention to the lows of the Thursday session last week. If you flush those, daily downtrend underway, and you will get further weekly consolidation. Not that much space on the Qs at this point in time. Anything above this guy right here, right? The whole 484, just looking for a weekly higher low for further trend continuation. They've been grinding away at this 12 EMA. Can they protect it or will they lose it? We will get that price action data over the next 2, 3, 4 days. Crucial moment in time, pivotal moment in time, I would argue, for the bulls right now. Moving into the XLF. XLF also down 0.3% today. Daily downtrend underway, yes, but we know the bulls are working with a ton of space, guys. With all this daily consolidation, even if we move further down, is it that big of a deal, guys? Even with the MACD starting to cross over right now, leading for maybe more daily downside? Well, no, the bulls are still very, very safe. Beautiful daily uptrend right now, looking for a weekly higher low. So if in the event we continue plunging on the XLF right here, start filling some of the election gap, start retracing towards our next support level, just understand what the bulls are trying to do, right? Looking for a weekly higher low for possible further trend continuation. Financials did a great job of upholding the SPY over the last 2 weeks, while everything was kind of just not moving, right? The Qs, although they had a nice week, they pulled back considerably last week. Healthcare has just been kind of pooping the bed recently as well. So what's been doing a good job of holding up the SPY has been XLF. So if you see a decline on XLF here, need to see other sectors make up for it, namely QQQ, healthcare, and especially semiconductors. Moving into XLV right now. So XLV Nice little day of pop today, 1.18%. But we know what the context is, guys. We are in a big daily downswing right now, and also in a weekly downtrend. So the bulls have to start everything from scratch. They're starting to react nicely from the overall zone. I'll kind of tighten this area because it looks a little bit ridiculous. I did this during one of the videos just to prove a point that in the event we lose the monthly uptrend here, where are we going down into? Into this entire zone. This is a range-bound zone for like 2 years, guys. So if you get another one of those, just want to show you that we do still have a very large base of support below us, before getting worried about the healthcare sector. So that being said, guys, weekly downtrend and the monthly consolidation phase, now we need to look at the size of the bounce. So far, so good. The bounce is not looking too bad, but still relatively weak, only a 23% bounce. You need to see the bulls at least come all the way up to about 145, create enough space, get the daily uptrend going, and only then can you say that the weekly chart has possibly put in a local bottom and looking for maybe a weekly uptrend recapture. But these things take some time for healthcare, guys. So it may just be another few weeks of uncertainty around healthcare to see whether or not they can get back the trend, put an end to this monthly consolidation, and maybe go for one more leg higher leading into the new year. Now, moving into semiconductors. So semiconductors, of course, will be affected by NVIDIA earnings tomorrow, but the damage across the sector was not so bad in the after hours. Yes, NVIDIA did drop 2.5%, but the numbers were very good, right? In terms of the sector, they showed that demand for their products and demand for the AI ramp is still a very real thing. However, we know that the semiconductor industry has been in a little bit of a cyclical bottoming out process as of recently. Not everybody has the same demand profile as NVIDIA, right? We went through a lot of these different companies, guys, and what I want to show to you, right, is the fact that semiconductors are a cyclical business, right? We know there was a lot of pulled forward demand in 2021 and 2022 with a lot of these companies, and since then it's been hard for some of them to really find that next leg higher, right? So you don't see it that much in applied materials. When we pull up some of the names that are exposed to PCs and electronic components, vehicles, right? Those markets have come down. Look at LRCX. Peak demand here, now falling back off, but the guidance for 2025 is quite good. And you can see this all across the board. I'm not going to go through many of them, but you can see this all across the board, right? MCHP, high demand 22, and then fall off in demand, and then coming back up, right? In the tail end of 2025 into 2026. ON Semiconductor, right? Same concept, big pull forward in demand, normalization, and then moving forward in 2025, back to the upside. So a lot of the companies in the semiconductor index have that same EPS and revenue profile, which is why it's been a little bit tough, right? But 2025, all of them, because we looked at all of them over the most recent last 1 month with all their earnings, all of them said that guidance for 2025 should be quite good. So semiconductor is still a sector that, although on the chart, it does appear that they're doing not too bad, a lot of the weight in this sector is due to, AVGO and NVIDIA, who have not been affected so much by that cyclicality, right? So analysis still stays firm down here, 237 down to 225, the cannot lose area for the bulls. In the event we flush tomorrow's lows tomorrow Tuesday's lows after tomorrow with NVIDIA earnings, daily downtrend underway, and we look to the bulls to play a little bit of defense down here around the 50 EMA. The bulls at this point looking challenging to protect the weekly uptrend. You can argue the weekly downtrend is in motion, and you can also make an argument that we're still kind of in range-bound monthly consolidation. Would not like to see the bulls lose this 12 EMA on the weekly. That's the 50 EMA on the weekly, right? Right down here, 50 EMA. And on the monthly, it's the 12 EMA. Cannot lose area for the bulls, guys. They have not really lost it since this whole AI craze started early 2023. So that is the cannot lose point. We'll take it one day at a time. I do believe that NVIDIA will be able to recover from its earnings, but it's the rest, guys. We really need to see participation from the rest of the industry. But as of right now, the money flows into semiconductors are not what they were prior to the month of July. The money has rotated to other sectors instead. Moving into the Russell right now, the Russell up about 0.13%, not looking too bad, but it needs the cooperation with the rest of the market, right? Now, coming back down, almost filling the gap down here, not looking too bad, trying to get the shorter time frames back, right? So if you put on the normal regular trading hours, you'll see they're trying to set up the hourly trend change and trying to get this daily bounce underway. We know the bears took back a lot of this move, guys, on the fibs, right? A lot of this move has been taken back, 61.8% of the move. So at this point, the V shape is somewhat unlikely unless you get a really crazy rally on the SPY and the QQQs in the next few days. But in my opinion, maybe something more like this, right? Consolidation phase, and then maybe finding a little bit of lift in the next few weeks worth of time, because such a big give back by the bulls right here just goes to show, right? Even though we're bouncing out of support level, which is the 2020 and 2021 all-time highs, even though the weekly is looking good, still a lot of push and pull in this market. So their market's topped out. It's like people, they don't want to fully put their foot on the gas just yet, because we know that there's some underlying risks right now in terms of the economy, right? Consumer spending, jobs market, economic output as well. The rest of the world, essentially, Europe and Asia as well, a lot of Asian countries are currently not doing too well in an economic landscape right now. The US is kind of a shining star. They're outperforming everybody. So people are hesitant, especially with rates still being so high, hesitant to really smash the gas pedal to the floor and fully embrace and embark on the risk on trade narrative. So the Russell's still a little bit muted, but on the short-term timeframes and the medium-term timeframes, the daily and the weekly, the bulls are still in control. So we'll see how this one evolves over the next few days of trading. Onto the Dow Jones now, painting a similar picture. Big rally after the elections, and since then, consolidation. Still trying to find the daily higher lows for a recapture, or a continuation rather, of the daily uptrend. If you break yesterday's low, well, you end up with a daily downtrend into our support zone, 43,000 down to 42.5, and you end up with more weekly consolidation. Good thing the bulls have a lot of space, looking very nice on the weekly, guys, looking for a weekly higher low for possible further weekly trend continuation. So the Dow Jones does not look too bad at all, guys. The bulls still control all the short-term and medium-term price action structure right now. We've looked over Bitcoin a lot this week, so I'll save you the analysis. The analysis remains the same even after yesterday's break and close above, right? Bull flag into possible new, well, not possible new all-time highs, but into a possible rally into the infamous $100,000 psychological area of resistance. And it looks like the bulls want to go for it, guys. Beautiful, perfect bull flag right now. And the weekly seems to know no bounds. But that $100,000, guys, everybody's talking about 100K. Is it going to be a sell the news event, or are they going to throw a curveball at us? Are we going to get to 100K and then just blast through it all the way to 105, 110, right? That nobody knows, of course, but for now, the momentum looking very good. Bulls in full control, lots of space, anything above pretty much 88,800 right now, looking for a daily higher low for further trend continuation. And now we can use this whole little section that acted as resistance for about a week and a half as newfound support in the event the bulls are not able to push from here and need to get a little bit of momentum before they make that next leg higher. But Bitcoin looking fantastic right now. Moving into big tech right now. Apple up 0.32%. Obviously, these numbers will be up for change tomorrow, depending on how the market receives NVIDIA earnings at the open. We know that futures are down roughly 0.5% right now, and I would not be surprised if NVIDIA opens red tomorrow. Maybe some of the big tech names take a little bit of a hit. That being said, Apple showing no clear trend structure right now. You can argue this is a daily uptrend, but we're struggling to break above the 230 area of resistance out of this red box that's been acting as resistance for a long time. On the weekly, the picture is the same. Very, very, very mixed market on Apple. Have not been able to break out to the upside, but also not really breaking down below. Now, this is a case and point of a stock just being trapped between two levels, kind of like Microsoft. And a lot of stocks are like this right now, trapped between 230 and 220, the resistance, and to the downside, 219 down to about 215. I still reiterate, Apple for me right now is not a buy, it's not a sell, it's just a hold because the valuation is still relatively high. And also, in terms of a swing trade opportunity, I don't believe that Apple has the juice in the tank or the possible news releases to warrant a 20-30% increase over current levels right now, unless the SPY and the QQQs go on a crazy rally, after which Apple will just kind of tag along, right? But I don't believe they have the news releases to really benefit from such a surge in demand for the shares of the company, right? So I'll continue to maybe play it on a swing trade basis using short puts. If we come down here, 220 down to 215, could be looking to write some short puts, maybe around the 50 weekly MA, around 210 down to 205. But for now, for me, no trade on Apple. But I mean, nothing's looking bad, right? The bulls are holding up the levels very, very nicely. No big red flags. Moving into AMD right now. Good old AMD. We'll see how they react tomorrow. But in after hours from their earnings, we'll turn the after hours back on. They did have a little bit of a dip, right? So they responded initially mixed to NVIDIA earnings, and now we're kind of curling back over a little bit. We know that AMD has been kind of struggling right now. Daily downtrend is underway, and the daily bounce was not high enough, right? We were looking for a healthy daily bounce to possibly muster into a new daily uptrend. We did not get as much lift as I would have liked, guys. Only a 38.2 bounce. So the likelihood of retesting the lows, especially if NVIDIA is red tomorrow and semiconductors are red tomorrow, very high likelihood. If you smash below, guys, watch out. You'll have a complete loss of all weekly uptrend momentum. We know that NVIDIA is the market dominant, has the market dominant share right now, 85% of the data center market. AMD right now, only a tiny 5% of that market right now, should be increasing their market share, but they will never catch NVIDIA at this point. Fundamentals of the company are still good, but I'd be very hesitant to play this one, especially when you have possibly better options like TSMC or like NVIDIA, right? Where demand is not a problem for them, and that have a lot more favorable investor sentiment around the company. That being said, if we truly get some brutal days down on AMD, I'm not opposed to playing some short puts down here in the like 120 down to 115 level, but I'm going to be a little bit conservative on the stock moving forward, just because now we see, guys, since their earnings, it's just the company's just not in favor, nor with Wall Street, nor with retail investors alike. People seem to just be continuously bidding NVIDIA, and I am going to be joining that crowd as well, right? Just joining the market leader. Eventually, NVIDIA will have its day, but for me to take heavier positions in the company, guys, I need to at least see a new daily uptrend and a recapture of the support level that it's been struggling right here, right? I need to see good price action structure and the weekly bulls come alive before I get interested in playing this stock. You can make an argument that while it's out of favor and while it's crushed, that now is the best time, but I can also make a similar argument to, well, we could just be playing the NVIDIA and TSM pullbacks instead, right? Moving on to Amazon. So Amazon down 0.85% today, but not looking too bad. They were down over 2% at one point on the day today, reacting nicely from the 200 level. They seem to be wanting to play defense, but we know the context, right? It was a daily uptrend, loss of the daily uptrend, flush of the lows. So now the bears have a chance at setting up the lower high into lower low daily downtrend flush. Is that big of a deal? No, because they still have the weekly time frame. Take a look at this. Just looking for a weekly higher low for possible further trend continuation. So possible drawdowns can lead into the mid 190 levels, which I will be more bullish on picking up some shares down here using short puts. But all in all, not a bad day for Amazon. The bulls still do have a chance of V-shaping back to the highs because they control all the higher term timeframes, right? Control of the weekly time frame and largely in control of this monthly time frame, finally getting the monthly breakout after 6, 7, 8 months of sideways consolidation. I do think that Amazon should have a very good next 3 to 4 months, potentially being able to attack all the way to 220, 230, provided that the markets cooperate as well. Still one of my favorite companies in the market, whether for a swing trade breakout right now, or even whether for a long-term investment. Moving into Google down about 1.25%, still not able to really blast out of this range. They had a great day yesterday. We know the context is still a daily uptrend, but it's looking a little bit shaky right now, right? Having a little bit of trouble breaking out of the whole 180 range, but at least we're not breaking down below, down here in the 170s, right? Still a decent area of support right now for Google, and although the short-term timeframes do give the bulls a chance at putting in the daily uptrend continuation, well, in the event they do not and consolidate a little bit lower and fill the remainder of this election gap right down there, we'll just know what the bulls are trying to do. Just some very healthy weekly consolidation for the stock, looking for a weekly higher low, anything above 161, weekly higher low on Google, and I will be looking to shop for this one aggressively. If we make our way back down towards the lower 170s, I will be writing some short puts down there. I still think there's great upside in the company, at least over the next 3 to 4 months for this stock. And as a whole, guys, profitability is very good. EPS expansion is very healthy. Revenue expansion, very healthy as well. And all the analyst price targets for the next year are considerably above the current share price. And that's why I do believe, as well as the company's fundamental valuation, why I do believe that it's still one of the most favorable trades in the market right now. Moving into Meta, so Meta up about 0.79%, not a bad day for Meta, but we know they've kind of been stuck in this daily downtrend, right? So the bears may be just looking for a lower high, moving averages as resistance, and if these guys fall off tomorrow because of NVIDIA, could be looking at the daily downtrend continuation. That being said, it would also be weekly downtrend continuation if we end the week red, but always remind yourselves, guys, weekly downtrend is just monthly consolidation. Monthly uptrend is very nice for Meta right now, could be looking for a little bit more consolidation. And if we come back into the 540 down to about 530 level, all the way down here, retesting our prior resistance all-time highs, I will be looking for a little bit of a swing trade on Meta. So at a first glance, the stock has been out of favor now for the last month and a half. Their earnings, however, were fantastic. The valuation of the company as well up here is fairly good as well. No red flags on Meta just yet, just some very normal sideways consolidation after a beautiful blast off from the all-time highs. Looking for a retest down there, and I will be looking to swing trade it myself. Moving into Microsoft right now. Microsoft as well, kind of like Apple, right? A tale of being trapped between two levels. Trapped between overhead resistance, 433 down to 422, and trapped above the support line 402 down to about 390. Microsoft, I mean, even though Microsoft's been consolidating sideways now for a good portion of the last 3 months, the fundamentals of the company have been improving quarter over quarter. Nothing wrong with Microsoft's fundamentals, guys. It's just sometimes these stocks do tend to consolidate sideways for a portion of time as they grow in to their valuation. We know that Microsoft does not have the cheapest valuation in the game, but that has always been the case. Microsoft usually always does trade a little bit rich just because of how consistent and how predictable their business model is and how much of a dominance they have on the rest of the competition, right? Look at this revenue curve. EPS curve is very, very nice. And the analyst midpoint right now, the average, is about 500. So all this consolidation, in my opinion, is a good thing for the bulls, just accumulating some. This is an accumulation phase, right? And I do believe maybe over the next 2-3 months, we'll finally get the distribution phase of a nice rally, potentially pushing 450, 460 towards the all-time highs. So I'm still very bullish on Microsoft, but the short-term price action, guys, is very, very mixed right now. You can see it on the daily down here, continuously playing defense at the 200. I'm taking my trades based off of two levels. If I'm writing short puts or put credit spreads, I'm staying towards the lower end of the range. And at this point in time, I will be patient to add more Microsoft shares or calls. I'm going to be looking for the lower end of the range. And of course, on the weekly as well, very, very mixed, no clear trend. So just a little bit of an accumulation phase on Microsoft. And that's how I'm treating it as well. Just accumulating some shares for the long-term portfolio and accumulating some swing trade positions because I do believe that Microsoft will have its glory day rallies ahead of it. Moving on to Netflix right now, another beautiful day for Netflix as a whole. Nice daily uptrend continuation. Higher lows are set. So as soon as this move is done, and we're kind of getting a little bit extended here, 80 on the daily RSI, guys. On the short-term RSIs as well, slightly overbought conditions. You can see now at this point in time, guys, we're really starting to get a little bit rich. So I would not be surprised if the consolidation comes sooner than later, but I'm not expecting Netflix to fall off a cliff. A lot of space, anything above 808, just looking for a daily higher low for possible further trend continuation, pulling a Palantir right now, right? And the overhead resistance at about $900. So we are almost there, guys. We almost got up to it today. 890, another 10 will be at psychological 900. The stock right now pushing the higher end of the valuations, a little bit rich right now, which is why, per se, I'm not going to be swing trading it up here. I would be more in tune with waiting for a little bit of a weekly pullback on this one, right? Looking for maybe something like a weekly higher low for further trend continuation. I could get behind that if Netflix kind of just goes sideways for a while and kind of grows into this new valuation, as it sometimes does. We know that Netflix can move sideways, sometimes for weeks at a time, right? As it goes into its own slight accumulation phase, and I'll be waiting for that one to get more clearly defined levels to base some swing trades off of. Now into NVIDIA, so we covered this one, of course, for earnings, but I just want to remind you of the levels that we'll be looking out for, right? So we know the stock in the after hours right now was trading around the $142 mark. We know the level to pay special attention to is down here at 137. Close below 137 the next few days, daily downtrend is underway, and you have a little bit further weekly consolidation underway as well. Where are we going to be looking for that weekly consolidation, guys? Is first touch down here, 130 down to 125, where they broke out of the previous all-time highs. That's going to be level number 1. Level number 2 is also a very decent level down here, guys. The 119 down to 115, just below the 26 EMA, and you can see NVIDIA over the course of this rally, when it does have pullback phases and it goes beyond the 12, usually it tends to level out around, in or around the 26, sometimes a bit lower. You can see that, as a matter of fact, all the way since the rally started, most recently, right? Reminds me eerily of last fall as well. We had a few times. So those are the levels that I'll be basing my trades off of, and I will be using short puts once again to build a position in the company. The volatility is very good on this company. You can usually get some very good deals if you're playing the wheel strategy on this one. But one thing that I'm not going to be doing, guys, is chasing NVIDIA when it's pushing all-time highs. I will be playing the pullbacks, and if I get a sign and we couple that with maybe some short-term oversold conditions on the 4-hour, on the 1-hour type of thing, and we get a sign, could be a decent place to hold the shares for some rally, for some juicy covered calls. And even down here, if we start coming into this level down here, guys, could be possibly a decent opportunity for me to build a swing trade position, maybe with some call debit spread. So I'm eyeing 130 down to 120 for maybe some call debit spreads with about 3 months worth of time, because I do believe NVIDIA will hit another leg of rally into possibly the new year as well. Moving into Tesla now. So Tesla, another flat day for Tesla in the grand scheme of, how volatile it can be. So not good, not bad, just kind of a normal day for Tesla, right? So daily uptrend is still underway right now, but we know we're kind of struggling. So in the event we start pulling back right here, is it that bad of a thing? Well, not really, guys. We'll just be kind of in a tightening range. Keep a special eye on how we react down here to the 12 EMA 321 zone. We know we have support down below us as well, 312 down to 296. Now, Tesla hasn't really lost anything. Just pay special attention if we crack 331, may just be going into sideways consolidation, and paying special attention how we react to support. But, Tesla bulls can just come awake tomorrow and just continue the daily uptrend, right? Nothing is really lost in the 3 days of consolidation. And above us comes a very big level, which is the all-time high area of resistance, 380 up to 400. On the weekly, not looking too bad either. Beautiful weekly uptrend. In the event they lose this pattern right here and come a little bit lower, is that big of a deal? Not really, guys. It'll just be looking for a weekly higher low for possible further trend continuation. And I would like to see Tesla, just for myself, right? Even though I am a long-term shareholder, for a swing trade perspective, I would love to see it come back down 310 down to 300. It'll open up some super juicy short put opportunities, riding some puts for the wheel strategy, maybe down here in the 280 range, which is where I would not mind continuing to farm premium on this stock. But even maybe, if we come down in this area hard, could be good for a little bit of a swing trade for some upside, right? So I'll play this one day at a time. But up here, a little bit of a no trade for me, because we're between two levels, between support and between resistance. We kind of equidistant risk to reward profile. So for that reason, I'm not yet swing trading it right now, but the bulls are not looking too bad at all. And now lastly, Palantir. So Palantir down about 1.37%. We'll see how they open tomorrow. But once again, Palantir, focus on this level right here, 58.55, guys. If you lose this, you will lose the daily uptrend, similar to back here, right? And you open up the door for the lower high into lower low. Would that be such a bad thing? Right now, there's no indication of that. The bulls can just continue to rally, right? They have not lost any levels. I'm just presenting you the fact of what happens if we do lose this. We may just be heading into a bit of weekly consolidation. Not that big of a deal for Palantir. They have tons of space. Anything above 41, just looking for that weekly consolidation, guys. And I will be playing it myself. If Palantir sees some heavier consolidation in the next 2-3 weeks moving forward, bringing us back down to a more manageable mid-50s level, the volatility on this one is usually pretty good. If we come back down to the low 50s, you'll probably be able to write some put premium, 48, 47, 46, and that's where I would not mind picking up some shares and swing trading this company as a whole. I'm not expecting it to come all the way back down there. I'm just saying if it comes back to midpoint in the 50s, I'll be looking to trade some short puts in this area, because if we spike down here for whatever reason, I don't mind buying more shares for a swing trade down there. But as of right now, guys, the bulls are still looking very, very healthy. And for overhead price targets, go for the psychological round numbers, $70 and $80. The bulls still looking very healthy right now. Nothing bad to say. So that's everything for our market recap. Tomorrow, with the aftermath of NVIDIA earnings, we should see a lot more opportunities in the market, maybe to the downside. So we'll see tomorrow in terms of more swing trades, which is why I'm not going to present you guys any trade opportunities just yet in today's video. I want to see the aftermath of tomorrow's NVIDIA earnings on the markets. I want to see how big tech reacts, and I want to see how a few of the small cap companies react to this one as well. We may be able to find some great opportunities in the event that tomorrow is a day of sell-off, and I'll be monitoring the rotation, watching how this pours into the rest of the semiconductor market, guys, right? So for that reason, I didn't go very heavy on the buying power this week, and I have a lot of buying power right now. We took some trades off yesterday at a profit, and so now I do still have a lot of buying power to go shopping, but I want the dust to settle. And considering the fact that we're kind of oscillating right now, are we going to continue the daily uptrend? Are we going to roll over? Well, I'm hoping for the best, but I'm expecting the worst. If we do get the rollover, I want to have some money to go shopping for my favorite companies. So hopefully that makes sense. That's it for me for today's video, guys. Hopefully you guys appreciated it. If you did, consider dropping a like down below. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new, if you like this type of content. I do it every single day after the close, Monday through Friday. And as always, guys, if you have any questions, I'll be answering a bunch of questions tonight. Please feel free to leave them down below in the comment section, and I'll be very happy to answer you. And in the event, guys, well, I mean, we did have one loss on target, but you guys know that one loss, we had a ton of wins, right? Ton of earnings wins. Look at this 2 weeks ago. A lot of earnings wins in the past few weeks as well. So overall, we're up. But in the event you want, and a lot of the trades that I did not post in today's video as well, right? But we have been making some decent money this week and the past weeks as well. If you want access to all of my trades, not only the wheel trades, but the call option trades, the share trades, the debit spread trades, and everything in between, the link to the Discord is down below. We do private market live streams every morning, and you can ask me all your questions all throughout the day on your favorite stocks and options, and I'm there to kind of hold your hand all throughout the way. So if that interests you, the link is down below in the description. And if not, I guess I'll see you back on the channel, guys. Take care, be careful tomorrow, have fun. I'll see you after the close, and peace.